And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Anytime you're talking about fundamentals in a market and direction, fundamentals take a little bit of time to play out.
We got crude oil today, kind of trading yesterday's value area really nicely, low to high.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning.
Good morning.
Welcome
back
to the market forecast.
We do apologize for yesterday, but
that gremlin
was beyond our control. That was a Comcast and Xfinity
gremlin. Hopefully
it didn't affect your trading.
It was a bad day for me to be out of internet. I think all but one of our markets had an opening range opportunity yesterday. So I started the. Hang on, I gotta get rid of the echo first. Thank you for letting me know. We should have that now. I am going to get rid of all these gremlins, I promise. But yeah, yesterday was a tough day to lose internet prior to the open, prior to the forecast yesterday. I had some pretty decent early opportunities yesterday. Of course, we know we've got some early opportunities here this morning. It is Wednesday, November the 10th. I'm John. Thanks for trusting me with your time. Great to be back with you. And I got the echo. Should be taken care of now. Good now. Okay, thank you. As always, it's good to be with you. As always, we're looking for context, risk management, and patience in our trading. Today, November the 10th, is the 246th birthday of the U.S. Marines. Happy birthday, U.S. Marines. And we'll make sure and tell Dan thank you later on today. Tomorrow is Veterans Day. We'll have 2 days with which to thank Dan and all of those Marines and everybody that is serving and has served in the U.S. Armed Forces. So this morning, big numbers. The CPI. We were expecting an increase in inflation. How can we not be? The core inflation was 6%. The CPI month over month is 0.9%, 0.6%, 0.9%. Both of those higher than expected. Jobless claims also higher than expected, but not by that much. Continuing jobless claims was expected at 2,095,000. It was 2,160,000 for the continuing. And the initial jobless claims, they were expecting 265,000, 267,000. So not a big miss there, but still a little bit higher than they were expecting. We're still waiting at 9 o'clock for wholesale inventories, 9:30 EIA petroleum status report, 11 o'clock the EIA nat gas report, and a 30-year bond auction all going on today. So today is really the largest number of economic information due out this week. There will be nothing coming out tomorrow. It's Veterans Day. It's a national holiday, so there will be no releases tomorrow. So we've got this all kind of set up for us. We have sitting down this morning, you could tell that there was a chill in the equity markets prior to the CPI and the jobless claims numbers. All major indices were set to open lower and are still set to open lower this morning. The only real notable earnings today is Disney. Probably getting a little bit of delay here. The character of the show. I've got a gremlin here. We'll invite him in later on. A little disconnect between the audio and the video, it looks like. And I do apologize. I'm going to get this fixed. Just waiting for some hardware to come to me. So, but any earnings today are certainly going to be kind of playing second fiddle to the economic numbers and the opportunities for us today. Crude prices tested last week's high overnight, sparked by a surprise in stocks. API announced last night a loss of 2.5 million barrels in crude stocks. The EIA is expecting a 2.1 million barrel boost. We've come off of that high in crude oil this morning. We're going to see that in the charts very shortly. The U.S. government, I guess, has shelved the plan to release crude oil from the strategic reserve. All right. You're getting some notification that we are having some difficulties, and I apologize for this. We'll getting it set up here as soon as we can. The VIX this morning is, of course, a little bit higher, 1813. The dollar index 94.40, just hanging right underneath that 52-week high, and the 10-year yield is up a little bit this morning as well at 1.48%. Got to say good morning to everybody. If you can see, good morning, Chris. You win the prize this morning, first in the room. Nice reaction in the Nasdaq. Andrew, good to see you. All the way from the UK, my brother Rick, always a pleasure to see you, my friend, my brother, I love you. Zerain, Nico, Jimmy Decker, good morning. Theo, good morning. The infamous Felix Escobar here. Patrick, Spencer, Dr. VJ, Johnny, Jeff, Brody, good morning. Drew, good morning. Janus, Peter Kajoba, good morning. George, love everybody telling me about the echo. I apologize again for that. I keep forgetting to do that. Internet issues always have stops with OCOs. Janus, good morning. Pascal, good morning. Jason, Isaac, John Peters. Gremlins have become a part of the character of the show. Well, here he is. I've got him. I'll just put him out here so we can all say hi. This is Stripe or Spike or whatever his name is. I'm gonna get rid of this guy, I swear. Jason, good morning. Alfred, Jerry is awake. Hopefully John is too. David Keen, Nick, Mert, Sean, good morning. Garrett and Michael, good morning, everyone. Just rejoining the combine. Welcome back, Michael. Glad to see you. We're looking forward to your success. And speaking of success, good morning, Vince. We have group coaching today at 1 o'clock. Here is the link to sign up for that. It's also now on the YouTube page. When you see this, you can see the link for group coaching. And today we do have market therapy with Dr. Menaker. That's going to be at 3:15 today, just after the markets close. We're just going to relax and have a conversation with the good doctor. It seems when I talk to traders, things always seem to go in streaks. It seems that I've seen a lot of traders having difficulty trusting themselves, trusting the fact that they can find good trades. And when they get in a good trade, they have a hard time trusting that they are actually in a good trade. I think a lot of folks really doubt themselves, and we're going to talk to the doctor a little bit about that. And I think a little bit about emotions. We all have emotions. Trading tends to bring out the emotions in us. There are those that say trying to control those emotions is the right thing to do for trading, but I tend to disagree with that. I think if we can find ways to use our emotions to our advantage, to use those emotions to help us to understand how our direct competitors, how the other daytime frame traders are feeling in that moment, can, I think, be very useful for us. So I'm looking forward to that. Market therapy available as a recording, yes. It'll take us probably a couple of days, but it will be on our YouTube channel that you'll be able to refer to anytime. Now, this is a question and answer session. We're going to start with just a couple of comments on a couple of things that I just mentioned, trust and emotion. And we're going to open it up to questions, and you're going to have the opportunity to have the good doctor, a clinical psychologist who's also an active trader, works with a lot of big traders, answer your questions directly. This is a fantastic opportunity for us all to spend some time with an expert like the good Dr. Menaker. So with that, I'm going to pop that link in later on as well in case you missed it or don't find it or whatever the case may be. And then you'll have the opportunity to join us. Again, the group coaching, 1 o'clock today. And then Dr. Menaker, Market Therapy, 3:15. We're looking forward to seeing you there. So, without further ado, let's take a look at, where's my cursor? There it is. Let's take a look at the daily and crude. And now I've got that mic on. Hopefully that's just right. All right, so here's the daily and crude. Probably our biggest move this morning was in gold. Nice move yesterday in gold as well. I'm going to talk a little bit about how not only the information today was important for that move, it was kind of set up for this breakout to the upside. We're going to see that very shortly. Crude is now in rollover. Next Tuesday into Wednesday, we'll be moving from the December contract to the January 2022 contract. Hard to believe, right? We are still waiting new information. We had a pretty decent upside move here yesterday. Volume was just okay, and we lost 9,200 in open interest. That's estimated, but a loss in open interest usually indicates a slowing in upward momentum. Now, there's some conflicting information here. We've got weekly kickoff high that we've closed above. 84.15 is settlement. We've tested down back to weekly kickoff high, which is 83.60, and we've rejected it, at least for now. So I'm going to be looking probably for opportunities to buy weakness in this market, always keeping in mind that it is rollover, and rollover tends to create rotational or range-bound trade. We do have a lot of information coming out. Anything can and will happen. We got an overnight test of last week's high. This should be the last bastion before we can go 2 points higher, if that is indeed in the cards for us. Take a look at the 30-minute chart now. I'm going to check with everybody here. Okay. All right. So here's the 30-minute chart. Here's yesterday's profile. We're above value. We are just about to open up, and it looks like we are going to be creating a small gap. All right. So we moved up yesterday. We lost open interest. That's not that encouraging. If we start to bring in new business above weekly kickoff high, I'm going to view that as a positive and look for opportunities for longs as this market continues to push its way higher. I'm not happy about crude oil going higher. I'm just going to try and trade what I see and take advantage of it if there are opportunities. Our overnight inventory was initially short when I first sat there. They've reconciled. We've created a gap to the upside, and gaps, we're opening out of balance. If the opening range is left at the low of the session today, that might be a good opportunity for us to see maybe the buyers finally came in and we may move this market higher right off the open. We're going to, I think we've got about a minute here. We're going to talk a little bit more about this, and we'll see if we can catch the opening range on this 1 minute chart. It's a little bit wacky, this chart, but what isn't when it comes to the market forecast? So we got about 30 seconds. So value area high right here was kind of I'm sorry, right here, this value area high right here was convergent with a resistant level, which now seems to be becoming support. Going to be a little bit tricky if we were down there. We've since moved higher, and we're going to just take a look here at this 1 minute chart, see if we can't get it to cooperate.
Okay, so this is that 1 minute bar right here. And so far, we're still in it. The drive is to the downside. We're still in the opening range. We got about 30 seconds left. Okay, if we leave the opening range at the high of the session, to me, that's a good target down to weekly kickoff high 83.60. No, gold is yet to come. Okay, so now we've got our opening range. The low, 84.32. So there we go. So now our opening range trade would be to the downside. Is this a high risk? 32 to 48. We're looking at 16 ticks in the opening range. And that's pretty much your risk if you're going to take this move back down to 83.60. We'll see if it happens. Anything can and will happen. My primary hypothesis of keeping the gap open has probably now fallen. Yeah, we just closed the gap, but this doesn't mean that this isn't a decent opportunity for us. All right, so opening range, the high of the session. Keep that in mind. It can be a useful thing to know about as the day goes on as to where that high of that opening range is. Just to kind of remind you, the high of the opening range, 84.48. All right. Let's get to the S&Ps. We've been talking, well, if we were able to yesterday, I think earlier in the week, really Monday, even into the end of last week, we were talking about the momentum to the upside becoming a little bit more questionable than continuation. 47.10 was a weekly kickoff prep number that was up here last week. That we broke out above last week's weekly kickoff high, and 47.10 was the target for that move. We got to it on Friday. We tested it yesterday. We seem to be having a little bit of trouble continuing to the upside. We've now broken upside structure in the day time frame. Nothing wrong with a little pullback. The market can't go directly one way all the time. It's going to take some time, I think, to digest the information that came out today. The market has been paying sellers of strength. Do we continue in that way? Open interest increased in the downside yesterday. We had an increase in volume to the downside yesterday. So there may be some interest in bringing this market back to earth. Not talking about a huge correction. I think it's almost impossible to predict those, but it wouldn't be a bad thing for this market to range for a little while or even get a decent pullback. Today, there's high economic risk and volatility risk. Take a look at the 30-minute chart. We are not open yet. You got about 27 minutes for that. Do we have some overnight inventory here? Yeah, we may. We've got settlement all the way up here, 46.78 quarter. We've got all of the overnight activity down below that. I'm going to say that the short time frame day overnight P shooters are short. If that is the case, then when we open, they're going to be looking for continuation to the downside. If they don't get that continuation, if we can't close a gap, if we close the gap, if we can't, what am I saying? They're going to be looking for sellers to continue this market to the downside. If that doesn't happen, we may see a gap close. We may see even a pullback up to settlement, which is basically where the overnight started, which would give us the opportunity to perhaps sell the market against strength. Okay, we don't know if we're going to have the gap yet. We've got response to the economic numbers that have already come out, and I think it's going to take a little bit to digest that. when you look at this chart, this is the 30-minute chart. There's only one upside target, and that's all-time high last week, 47.10, whatever the high was. I remember 47.11.75. It was 7 ticks above that 47.10 level. There's only one target up there. There's only one visual to look at. We've got plenty of visuals down below. If I shrink this down a little bit, we've got naked points of control aplenty. I would be looking really just for a move back to 4,600 or 45.99, which is actually weekly kickoff low. Last week's low is still even below that. So we can have all this happen and really not change the value of the S&Ps that much. We don't know what's going to happen. Trade what you see. Nasdaq. Okay, short time frame downside structure. We've got 3 days here, basically one time framing lower. One time framing. Remember, each consecutive bar has a lower low and a lower high. We had one time framing on the way up. We're in one time framing on the way down. This may end up just being a bull flag, and this market may just continue to go to the upside. We don't know, but we've seen now yesterday an increase in volume again, and an increase in open interest. So that means that sellers came in that are kind of looking for this market to go lower. If those were longer time frame and they remain in the marketplace for a little while, we could easily see a pullback to weekly kickoff low. We're currently wrestling with a weekly kickoff high from last week, which, to be precise, was 16,165. 16,165. What are we looking at on the 30-minute chart? So here's that weekly kickoff level that we broke out of last week. Here's that all-time high. Here's our one-time framing activity to the downside. We're going to be opening with a gap. Pretty good probability of that here in the Nasdaq. And again, we've got 1, 2 visuals up above. We got lots of visuals down below, lots of visual targets. And when you look at them, they are highly visible, highly eye-oriented. So I'm going to be looking at this and watch the opening range trade, because out of range, out of balance may be an important information coming from that opening range. Yesterday in the S&Ps, gold, crude oil, Nasdaq, euro, and nat gas all put up opening range trades. Gold didn't go all day, but it offered an early opportunity. We may get that here in the Nasdaq. We may get that in the S&Ps as well. We don't, we're going to see where the market opens. We've got about 21 minutes before that happens. So here's the daily in gold. So it's the open interest that's been increasing on the way up here, that we're kind of thinking we've attracted some buyers in this market, and they may continue. So this push to the upside seems to be somewhat foretold. Yesterday on the breakout above that level, we had a slightly higher amount of volume, but we added 19,000 in open interest on an up move, above an important inflection level. That says there's something to that. There's buyers coming into this market. So the breakout yesterday was low on volume, but a pretty big boost in open interest. We get a test back to weekly kickoff low in the overnight, which is rejected. Not a lot of participation there, of course, but where are the longer time frame participants? Well, we may have found some yesterday, and as long as we keep this market moving to the upside, that may indicate that longer time frame participants are continuing to add to those positions. Now, I'm going to take a look here and cumulative delta. Look at how delta has dropped since we've been moving higher. This can be an indication of longer time frame buyers just waiting and picking off shorter time frame pea shooters that are selling into this market using market orders, and then they just move the bids up. They just move the bids up. So eventually they get the short time frame traders way too short, and then the short time frame traders have to cover because they're not going to take things home overnight or over the weekend, and they end up perpetuating price in the direction of their competitors, the longer time frame buyers that seem to be accumulating buys against shorter time frame market order hitting traders. So this delta is saying, hey, there's a divergence here. You would think that when price is moving higher, you would see more aggressive buyers and positive delta. The fact that there's a divergence to that is indicating there's something else going on. There's a snake in the woodpile here. Now, I'm not sticking my hand in there. I'm going to try and go with them. All right. So good news for those that might be long a little bit of gold. Euro, still range bound. Volume and open interest continue to kind of trend lower. You can see the trend kind of lower here in volume as we still just kind of remain range bound here. Open interest, we lost 1,800 yesterday. We're in short time frame control and range bound rules, but we've got some pretty far away areas where the range bound is evident. We're going to be looking at short time frame levels in that case to look for opportunities. It's because it's really the only way we're going to be able to limit our risk. Okay, I had everything on here, and all right. Well, I guess we're gonna fight. Okay, so gap rules. Looks like we have just closed the gap. So, this area here may become resistant, move back inside of value. Could mean the market could trade all the way back to the high of value. Where's our low? Well, we've got a visual down here in this naked point of control. Didn't really do much accepting of an area that could use some repair. So I'm going to be somewhat backburnered on this market until we see some more important levels and longer time frame. Yeah, we got better things to watch here. We got gold on a $30 move this morning. Holy cow. All right, nat gas. Let's go with the 10-year first. Oh, hang on. There it is. 4 days range bound. Getting kind of near the low end of that range, though, aren't we? Obvious range here, an obvious higher range here. This area right through here is going to be somewhat pivotal for us. If we can hold it, we can just continue to be range bound here. If we can't hold it, we can get sucked into the previous range from about a week ago that was there for about 2 weeks. Volume and open interest weak. We lost 34,000 on this up move yesterday. Volume obviously trending lower. Short time frame control. So we open, close the gap, resistance right through a previous naked point of control here. I'm going to end this ray so that we know that has already been checked. Not a lot of visuals that remain unchecked down here until we get to the weekly kickoff low. But checking to the point of control, checking to close the gap and not accepting inside the gap has me thinking of selling strength if I get the opportunity. It's going to be a hard it's going to be a hard trade to find. I'm going to have to really stay patient for that and be, again, very, very patient. You guys probably get so sick of hearing me say that. Nat gas, a downside breakout yesterday on really good volume and an increase in open interest of 7,800 contracts. This is good participation. Close below an important inflection level. We're seeing continuation in that now. The only target I see before we can head even lower than that is this swing low here from September 7th, which is $4.697. Below that, I mean, it's hard for me to even say, but we've been saying that, how we're coming into the winter months. Everybody's really concerned about the nat gas and energy and all that, and the nat gas put in a high and has been largely, over time, almost one time framing lower. It just seems unnatural, but we got to trade what we see. We got to trade what we see. All right, so here's the 30. Here's our breakout. Take this back. Last week's low, weekly kickoff low. We broke out. We traded. We closed below it. 4,979 is settlement. If you want to put that on your charts, we don't have a gap close here. The market is really just continuing to rotate lower. I don't want to fight this. The continuation of this move without some kind of structure. Mentioned that September 7th swing low is a potential way to limit risk. I don't want to fight a move where I'm just trying to pick bottoms. Overnight short gap rules. We did not close the gap in regular trading hours. We go with the gap. Try and find pullbacks and find structure in the day time frame that you can lean on. What kind of structure might we find? Well, where there's always no, that was a fail. Well, we're always looking at value area high, value area low. If we can find an opportunity up near value area high while the market remains in a downside structure, that might be our best bet. All right. Okay. All right. So let me put the link in again for market therapy today. Again, that's 3:15. Wonderful opportunity for you to have a trading psychologist answer your questions. Fascinating always. I find it relaxing. I'm usually pretty tired at the end of the day, so turn down the lights and just have a very calm session with the good doctor. I look so forward to the group coachings and these market therapy sessions. I'm hoping you can be there to take advantage of them. And of course, if you're not, you'll be able to see it on our YouTube channel within a few days. Right. Gold exploded. Wish there was a toy futures market. Talk about volatility. Yeah, right. We would all probably want to be long because we don't know when the toys are going to land. All right. Today is Wednesday. Group coaching, market therapy. You will see Dan for the recap. He'll probably keep it short so you can get to market therapy. And I'm looking forward to seeing everybody today. We are looking forward to your success. So take your deep breath. Be humble, gentle, and creative and grateful in your trading. I'm looking forward to a good trading day today and a good trading day for all of you. So get out there, make some profits, trade well, and I will see you at 1 o'clock for group coaching. If I don't see you then, maybe market therapy, and if not, we'll see you tomorrow morning, 7:45. Hopefully no more problems. Hey, Fred, good to see you. All right, we'll see you later. Trade well, everyone. See you in the pit in a couple of minutes.